My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica from San Francisco. Other people want to make friends. I'm just trying to make you some money. My job, not just to entertain, but to educate, teach, put all this in perspective. Call me at 1-800-743-CNBC or tweet me at Jim Cramer. So let's see. Land O'Lakes butter, $6.25. That was about $5 last year. Scotch salmon, $16, up from $12 a year ago. Did that Philly cream cheese actually just double? Homes up 19% 2 years in a row. Didn't it just pay $400 last year for a tire that cost me $800? Used cars, talking about 8% gain in 2 years. Don't even get me started on the price of flank steak or stone crab claws. You're lucky if you can even find them. And of course, then again, there's that stock market. 2 years ago, S&P 500 traded at 3,320. Now it's at 3,855. And that's after a rough day where the Dow shed 313 points, S&P tumbled 1.13%, and the NASDAQ lost 0.95%. Hey, why don't we just throw in cryptocurrency too while we're at it? 2 years ago, Bitcoin stood at 10,860, while Ethereum was at 370. Now they're at 19,000 and 1,350, respectively. Even if you're totally crashing this year, you are still up way too much for something that may just turn out to be for fun. I know that's a crazy amalgam on a shopping list, a group of items that makes absolutely no sense to put together. Unless that issue the Fed chief. If you're running the Federal Reserve, you want those prices back to where they were. You don't care that Bitcoin ran all the way up to 69,000 last year. Now it's been more than cut in half, much more. You don't care that the average tech stock's down nearly 40% that I follow. Hey, we have NVIDIA and Salesforce.com on tonight. NVIDIA's plunged from 346 to 131. Salesforce from 311 to under 150. I know, that is just merciless. But the Fed doesn't care. These tech stocks are just like packages of cream cheese or crates of eggs or a new shingled roof. What do they all have in common? They're all assets that are still too high on the eve of one of the most important Fed meetings in living memory. A meeting where it seems that the Fed Chief Jay Powell has absolutely had it. He will not tolerate another day when we get surprised by ever-rising prices at a Walmart or a Home Depot or an Albertsons or AutoNation or a Toll Brothers Development or even, yes, the New York Stock Exchange. He doesn't want to hear that Ford just paid $1 billion more in cost for supplies. He's not gratified that the stock lost money today, but he's not bothered by it either. He doesn't want to hear that eggs are up 13% year over year, butter's up 25%. So what if Ford stock fell 12% today? It used to be in the single digits. Powell's done. He thinks he's been a patsy. He hasn't been, but he thinks he has. He's done being beaten by higher prices wherever he looks. Where he's sick of endless wage increases. They can't keep up with prices anyway, so you got to bring the prices down. I know it's not an encouraging story for the stock market, but the Federal Reserve has a dual mandate. They need to balance price stability versus employment. Given that we have historically low unemployment and historically high inflation, Powell's going to bring the pain. It's a no-brainer for him. I know a lot of people feel that stocks are collateral damage in the Fed's war on inflation. That is just not true. There's nothing collateral about it. Stocks represent purchasing power. You can sell them and use that money to buy stuff. The Fed needs people to have less purchasing power in order to stamp out inflation. They don't want you buying a boat or fixing up your home with better appliances. I don't know, maybe they don't want you to go out for expensive mail either. They want people to defer these purchases, let the supply chain rebuild itself, and maybe even force some retirees back into the workforce. That'll help fix the labor shortage, get wages lower. Powell wants people to think that their homes are going down because there are too many homes, and not just because the Fed's choking off credit. And they want you to hold the line on crypto prices because so many people have gotten burned by speculating. And speculating itself involves the creation of money to bet with. Again, the opposite of what he wants. He wants crypto down below 12,000. He wants Ethereum at 300 again. Now, while it's true that commodity prices have come down from their highs, and that's definite, much like stocks, that doesn't mean a thing to Powell right now because they can pop back up in a heartbeat if he doesn't get that wage inflation down. That's killing him. That's the final frontier. And the Fed will keep hitting the brakes on the economy until the labor market cools down. Every business person I know wants to find out where the heck their former workers have gone. Powell doesn't have that luxury. He's on a mission to force you, wherever you are, to get back into the office, or at least to sign up. I know that sounds terrible. Sounds horrible. But it's his job to beat every kind of inflation, especially wage inflation. And that's the only way to do it. He can't create more people. That's what he means when he says, pain ahead. All right, now some good news. When you look at all those prices, I mean a basket of everything, stocks are already down more than most of the assets we're talking about. Bad news? Pretty simple. When the Fed wants all assets down, when they create a tsunami that wrecks everything, stocks are going to lose value, even from here, even the best stocks. They can't stamp out inflation by having stock prices go up. I know this is a controversial view that I've been offering for the last couple of weeks. Most people hope that the Fed can spare the price of Salesforce or NVIDIA when they drive down the cost of a soda. Lots of holders of Bitcoin can't believe that Powell's playing Grim Reaper with their assets. I mean, without even realizing the wonders of the blockchain or the glory of crypto. Doesn't he see what he's doing? I got news for you. Your loss is Powell's gain. Well, he may be further along than we think. He wants assets to go down more. Sometimes you don't need to know the price of the Dow. You just need to know the price of Kerrygold, butter, or a Lennar 3-bedroom. If they come down, not just versus last year, but versus 2 years ago or 3 years ago, then your stocks can maintain, if not go higher. Until then, we get sporadic rallies, tend to fail, right? Or we get stocks with positive catalysts. But the bottom line is these gains will be muted until Cheerios are BOGO, buy one, get one, and homes and cars lose value the moment you buy them. Let's take calls. Let's go to Nico in Illinois. Nico!
Jimmy, we got a big booyah for you here in Chicago. How are you today?
I love that. I'm going to be visiting Chicago in October. I can't wait. One of my favorite cities on earth. How can I help you?
Well, I'm wondering about Bristol-Myers Squibb. I'm thinking of lowering my cost average basis a little bit. What's your take on the company?
I like Bristol-Myers. It's a
bearish?
69. Bristol-Myers could trade at 67. At 67, that's the level that I've been looking at. Bye. I think it's a good one. How about Jeremy in Pennsylvania? Jeremy!
Booyah, Jim. Jeremy from Mars, Pennsylvania. Quick shout out to my youth group friends at Glade Run Church doing missionary work in the U.S. and abroad. My question today is about UPS. With FedEx's recent guidance that sank multiple industries from shipping to paper, but UPS still says their guidance is good for this year. But they have union contracts expiring at the end of this year. Love them or hate them, the railroads have recently reminded all of us that unions are big and strong. With the union fighting for raises due to inflation and UPS fighting to prepare for market stagflation, these will not be pretty negotiations. Where do you see UPS in 2020?
You got it right. I think that Jeremy's got a horse sense. I am concerned about UPS has come down a great deal in conjunction with our interview with FedEx, but at the same time, I know it can fall further. Let's go to Chris in Florida. Chris.
Yes. Booyah, Jim. How are you?
Booyah, Chris. I am well. How about you?
Great. First off, thank you for making us all better investors in this crazy bananas market.
Oh, thank you.
My stock is Disney. They posted
okay, I think Disney, it's a charitable trust name. Boy, I still love the club, man, more than ever, because this is the kind of thing where the club gets tough. But I think that Disney can go down a little more. When I talk with Jeff Marks, we're thinking our next buy's got to be under 100, even though I hope it doesn't get there. All right, listen, your loss right at this moment, maybe soon, no, but right now is Powell's gain. On Mad Money tonight, fresh off the company's GTC conference, I'm learning more about what's happening ahead for NVIDIA with the modern-day Da Vinci, Jensen Huang. Then Johnson & Johnson's new CEO joins me for his first interview from the company's brand-new Cut the Ribbon Innovation Center. And Dreamforce kicked off today, so we're heading down the street to check in with co-founder and co-CEO Mark Benioff to learn more about their most sustainable conference ever. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.